Political memories may remember this.
Massive speculative flows continue to disrupt the functioning of exchange rate mechanism. The government has concluded that Britain's best interests are served by suspending our membership of the exchange rate mechanism.
That was Norman Lamont conceding defeat on Black Wednesday when the pound was forced out of the European exchange rate mechanism. The 30th anniversary falls today, and it's been marked by miserable retail sales figures. It was announced this morning that the volume of sales fell by 1.6% in August, a significantly worse result than most predictions, and one that put yet further pressure on the value of the pound. We're joined now by Nicola Horlick, City Fund Manager, who now runs Money and Co. Good afternoon.
Good afternoon.
What do you make of the figures this morning?
Well, they're very bad indeed. So the forecasts were 0.5% decline, and actually, as you said, retail sales fell by 1.6% in August. And what we're seeing is a very sharp decline in what we would call discretionary spending. So things like department stores, sales declined by 2.7%, household goods, so that's anything from furniture to fridges, 1.1%, and clothing down by 0.6%. And, it's clear that because people have been battered with all sorts of increases, we've got general inflation, but we've also had the national insurance increase, which may be reversed, but people have had to pay it over the last few months. And then we've had energy price increases. We've still got the hangover of COVID and interest rate increases. People are beginning to cut back quite markedly. And I wouldn't be surprised if the figures show that we are actually already in recession when we get the next GDP figures.
You anticipate my question. That is the bottom line of from what we learned this morning, you think?
Well, yes, and that's why the pound is so weak, because currency markets, currency traders are looking at these figures and they're saying this looks like a recessionary environment, and therefore they're devaluing the pound.
And how serious is that, do you think, in the longer term, the devaluation of the pound?
Well, the problem is we do import an awful lot of goods, unfortunately, so that makes those more expensive and adds to inflationary pressure. And we've, in my view, rather shot ourselves in the foot with Brexit, because it should mean that our goods are cheaper and therefore our exports should be increasing. But because we've made it more difficult to export to our major export market, we're not seeing the rise in exports that we should be seeing. We should be seeing a benefit from the lower pound from that point of view.
We're going to hear from the Chancellor, as we understand it, next week, and if he announces a plan which involves a very significantly higher level of government borrowing, do you think that will have a further impact on the pound?
Well, the big worry about that is that if there's a general lack of confidence in the UK economy, we are relying on people to actually buy gilts to fund all of this. And if international investors decide, we don't really like the look of gilts, that means we're going to have to see further increases in interest rates to get people to buy gilts. And that then puts much greater pressure on households as their fixed rate mortgages come to an end and they have to renew at higher rates. I was just looking at mortgage rates this morning, and fixed rates were around 2% a year ago, and now they are around 5%. The Bank of England is actually meeting next week, and the forecasts were for another 0.75% rise. I would hope that they will take note of what's happening and not increase by that amount. But even if they increase by 0.5%, that would mean fixed rates will probably go up to 5.5% against 2%. And there are still an awful lot of people with interest-only mortgages who are going to see very big rises in their costs in terms of mortgage costs.
And I know Black Wednesday is a very different thing. Not least because we're not in an exchange rate mechanism anymore. But do you think something of that kind could be looming?
Well, we went it alone. We're not in the euro, when a standalone currency, and that's why it's so important to make sure we keep international investors on side. We need confidence in our currency. We need confidence in our debt so that people buy gilts. And if we don't have that level of confidence, we're going to have some big problems.
Nicola Horlick, thank you very much indeed for joining us.